Hello, everybody, and welcome to the third part in this series, Inventory Accounting Simplified series. This is the last and final piece of this. We have the entire crew together today, which we're really happy about. As part of this webinar, you'll get to see a lot of fun faces. There'll be 3 separate individual companies all represented. Incidentally, my 2 very favorite partners are both on this webinar with us today. I feel like it's kind of like a family reunion. That's how much fun it is for me to have all of these people on the call with us today. So let me introduce the lineup you guys are going to get to interact with today. We have, on our side, we have Carly, who is the person who runs our inventory team here at LedgerGurus. And then we have me, the CEO. I'll be acting as the host and the moderator, and you'll get to hear me, give a few spiels on various things accounting. Then we're going to hear from Zach on the Finale side. He's their customer relationship manager. Tamara on the Finale side, she's their director of sales and strategic accounts. And Jeff is the new face to this webinar. Jeff is the head of marketing at A2X. Like I said before, my 2 favorite partners on our call with us today. Just such great minds involved in this, such great partners. One of the things I love about both of the partners we have on us today is they really do partner relationships really well. They've turned our relationships into more than just partnerships. They're also now true friends, and I can't wait to have you guys get to hear from them today. So before we totally launch into this, we're going to go into a poll to just sort of give us a little bit of framework for who you guys are that are on the webinar today, and helps us understand how we can best serve you by really directing our comments to the audience today. So please just take a few moments and answer this poll. Really what we're asking you is if you own a consumer business, or if you're in the accounting space, or if you're kind of a hybrid between the 2 of them, go ahead and just take a second to answer the poll. We're not going to stay on here for very long, so just make it quick, people, make it quick. Kelly, I'm assuming we get to see the results of the poll, correct?
Yep, just a moment. People are still coming in.
Okay, awesome. Yeah, we're the other thing I want to make it very clear as you guys are taking the poll questions, these webinars have been a really great opportunity for people to get a lot of great questions answered. And these people are people who charge a lot of time for their money, and this is an opportunity for you guys to basically have access to their minds for free. So we would like to invite you guys to start submitting your questions through the Q&A as quickly as you possibly want to, because our goal is to really get to every single question that you have today. So please make sure you go ahead and get those submitted so we can best serve you. Kelly, poll results? Oh, there we go. Oh, awesome. So most of you who are with us today own a consumer product business, and it looks like the second most represented group are accountants who are supporting probably e-commerce businesses. So that's great. That's a great combination of people. So let's talk about what the agenda is going to be today. If you have not had a chance to watch the previous 2 sessions that talked about really great things like the 3-way match, internal controls, how to make your operational functions around accounting more streamlined and around inventory tracking more streamlined, please go back and watch those. The whole series was meant to be taken in as part of a series. Our goal was to truly educate and serve. And so they were not salesy at all. We are not trying to sell you guys on anything, although we are great, and so is A2X, and so is Finale. But that is not the purpose of this. We invite you to go back and watch those other webinars if you haven't had a chance to watch them already. So I'm going to quickly introduce LedgerGurus. LedgerGurus is an accounting firm that is focused on the needs of e-commerce businesses. So we go really deep on all the things that you would expect us to go deep on, really deep on inventory, accounting and tracking, sales tax compliance, channel reporting, and our real goal primarily is that our clients are more successful, that we're the best business decisions our clients have ever made. So our goal is to help them be more profitable. So profit-driven financial insights and really set up to help e-commerce businesses succeed. So now I'm going to punt it to Tamara, who's going to introduce Finale.
Yeah, thanks so much, Brittany. So Finale Inventory is actually an operational tool, and we were actually designed to eliminate inventory chaos. We've helped thousands of businesses since 2009 take control of their stock, streamline operations, and also scale their businesses. Our goal is actually to empower e-commerce businesses so that they can grow without inventory and operations slowing them down. I like to say that we're packed with tons of of automation tools, real-time visibility across selling channels like Shopify, Amazon, FBA, and TikTok, to name a few. And last but not least, we offer free hands-on training, and our support is world-class.
Yes, it is. Both of these partners' support is world-class. And it might actually be, this is the other reason why they're probably my favorite partners. Both of these partners' support is world-class, which, as you guys know, as you're trying to operate businesses, especially in the inventory space and the channel reporting space, like if your support cannot help you resolve your problems, you're basically dead in the water. So let's have Jeff introduce A2X. Thanks, Tamara.
Thanks so much for having me, Brittany. I'm excited to be on here with the amazing LedgerGurus team and the Finale team. As Brittany mentioned, my name is Jeff. I'm the head of marketing here at A2X. And if you're unfamiliar with A2X, we actually do something that seems really simple, can feel relatively complicated if you're in it manually, but when you're using A2X, not so much. If you're selling on Amazon, Shopify, eBay, Etsy, or Walmart, and you get a payout on your bank feed in QuickBooks or Xero or whatever accounting software, we just take that data, organize it into the appropriate chart of accounts, post it as a summary into your accounting software, and then click reconcile, one click. We work with the top e-commerce accounting and bookkeeping experts in the world, which LedgerGurus, I'd categorize in the top 1% of e-commerce accounting practices. So they trust in our accuracy and our automation. And as a result, folks that are working with practices like LedgerGurus get to benefit from accurate financial data. And if you're not and you're doing your own bookkeeping, you could also use A2X. So when we say award-winning, by the way, we didn't just make that up. We did win a few awards in 2024, which is cool. We won Xero's Practice App of the Year award, which was a lot of fun. Sometimes award-winning can be misleading, but I just wanted to, tell you it's legit.
Legit. I can vouch for that. It's legit. Whenever someone comes to us and they're using any tool besides A2X and they're telling us all the problems we're having, we're like, why are you using something besides A2X? And yeah. So I want to just give a shout out to Joey Adams for being the first question of the day. Congratulations to Joey. Kudos to you. Good job taking us up on our offer to basically give you free access to our minds for the next hour. Please feel free to submit your questions. Let's go over what this agenda is going to be, but also I want to call out the fact that Kelly dropped in the chat the link to the other two webinars that led into this. The first one, Financial Impact of Inventory, How Inventory Shapes Your Business Bottom Line, and the second one, Purchasing and the Three-Way Match, Effortless Purchasing, Clean Records, and Seamless Reporting. So again, make sure you watch those if you didn't have a chance to watch them earlier. So the agenda for today will be, we're going to talk about what is cost of goods sold, the difference between COGS and costs, which cost of goods sold, cost of sales. This is a really fascinating thing, incredibly important to the success of e-commerce businesses, why it matters that you do this right, why you want to automate COGS, and options you have for calculating COGS, in particular partnerships between the two app partners we have today and what it means for you guys and why we're really excited about that. So we're going to jump into the first discussion. Carly's going to take us through what you're likely to see as some of your top costing frustrations as you really begin to lean into this.
Thanks, Brittany. Like our last couple webinars, we kind of started with talking about the frustrations we see as people come to us with help in inventory accounting. And one of the big ones, obviously, is costing. Lots of frustration here as we start to talk to them about their inventory. We ask them how they are determining their product cost. And a lot of them aren't quite sure. We'll ask them if they're using a landed and a buy cost. They're not sure what that is and what can be wrapped into a product cost, whether they can include tariffs and duties or shipping, and then even how they do that. And then they get frustrated with all the fluctuations they're seeing in their costs and having to recalculate them all the time. Or do they not? Do they wait till the year? And so there's a lot of frustrations there. A lot of it's just not even knowing what COGS is. And what's the difference, like Brittany said, between COGS and the cost of sale, where that falls on the profit and loss, what should be categorized where. Lots of frustrations as we try to talk with them and get that ready. And remembering that inventory accounting really blooms from operations. So the cost and product cost is all on their operations. So I'm going to kick it back to Brittany to discuss the biggest thing, calculating COGS.
Yeah, so I'm going to start also by just defining this just so we're all on the same page. So if you're working with inventory, you're probably familiar with this, but there's probably at least a few of you that are kind of new to owning a product-based business, and terminology could be really helpful to understand. So first of all, COGS, cost of goods sold, meaning that we're only going to expense what was actually sold as opposed to expensing everything we've purchased to sell. Instead, it's going to sit on the balance sheet until we're ready to sell it. And after it's sold, it's going to be expensed through cost of goods sold. The equation that I learned in college when I was learning about accounting that still really holds true and really helps us understand what's really happening from a movement of inventory perspective is that a way that, and incidentally, a way that you can back into a cost of goods sold calculation, if you think about it in terms of algebra, one equation and one unknown means you can solve for any of these pieces. I can't tell you how many times Carly and I at least have used this equation to solve for something that we needed to solve for. So the equation is basically, and you can, if you remember back in algebra, you can change the order of this in any way you want to isolate the variable that you actually need to solve for. It's actually a very handy equation to have on hand. Is that cost of goods sold is also the same thing as opening inventory, which represents the value of what you started with during the period of time you're trying to cost for, plus the purchases that were actually purchased during that period of time, the value of all new inventory bought, minus the inventory you have left at the end of that period equals COGS. So whatever you're trying to solve for, one of the most common ones that we have to solve for is ending inventory balances or purchases during the period of time. Any of these can be isolated as the piece that you're trying to solve for, but I would just write this equation down or take a quick screenshot of this because it's one of the best ways to clean up things if you're not sure where you stand, is to take the knowns, solve for the unknown, clean the system up, move forward, and begin again with a new frame of mind. So what is included in cost of goods sold, this very important number? Well, the first part of this is always going to be the buy cost. So this is going to be what you actually paid your vendor for the product. Think about it in terms of if I was to buy something from China and whatever that vendor is charging me per SKU would be considered my buy cost. But then in addition to that, if you really want to be having a really clear picture of how you're doing from a profitability perspective and what your cost of goods sold are as well, you're also going to want to consider landed costs as well. So these are all of the cost to purchase and deliver the products to your warehouse. These are not the costs, by the way, to have those products leave your warehouse. That's going to be part of what we include in cost of sales, which Jeff's going to talk about in just a minute. But this is going to include things like what you paid for the product, the cost to ship those products across the ocean and truck them to the warehouse, wherever it is, the packaging that it takes to get those products to you, and any tariffs and import fees that you might incur along the way, of which I'm sad to say it looks like they're going to be going up. So it's going to become even more important for you guys to be tracking by landed costs to have a really clear picture of what's happening with everything that's going on with your cost of goods sold. Now, one of the most common arguments we have with our clients is that they want to include in cost of goods sold a lot of stuff that shouldn't be included in cost of goods sold because they understand the relationship, that there is a fundamental cost of selling that stuff, and they want to include all of that in cost of goods sold, but that is not considered cost of goods sold, and there's a reason to keep that relationship more clean. What I invite you guys to think about is this concept called cost of sales, which Jeff is now going to go into detail on what that means, but you guys are right. You definitely are understanding clearly, like there is a significant piece of this that you need to be aware of. So Jeff, why don't you build upon this idea of cost of sales?
Hey, Brittany, did you say Jeff or Jess?
Yes. Sorry, Jeff. Yes, Jeff.
Okay, sorry about that. So cost of sales, all of the costs to sell your products and get them to your customers. So that typically includes things like marketing, merchant and payment processor fees, packaging to customers, shipping to customers, and then other indirect costs. I think one of the recommendations that we tend to make is clearly identifying what these costs are and what's included with your accounting partner when setting up the relationship is of critical importance. And then also, there's like a big alignment opportunity here in terms of understanding what's included within these, because as Brittany mentioned, that tends to be one of the more challenging back and forth between clients as well as their accounting partners.
Yeah, great. So one of the things that we invite our clients to do in order to be able to give them visibility into both the concept of cost of goods sold and cost of sales, is to change the way they represent it on their financials, basically. So the reason why we invite you to not just dump all of your cost of sales into cost of goods sold is because this relationship between what it costs you to actually sell your product in its fundamental form of buy this product and sell this product is a really important thing to keep track of. One of the things I like to talk about is give a scenario of basically saying, if I was to buy a blanket for $100 and I was to sell that blanket for $80, I will never make a profit in my business. I am literally losing $20 every single time I sell a blanket, and no action I ever take will ever put me in a profitable position. A lot of times our clients who are not tracking clear cost of goods sold will assume that if they just drive their sales up higher, I'm just going to pour a bunch of money into marketing. I'm just going to pour a bunch of money into driving sales up. It will solve the financial position I find myself in. But 100% of the time, if you are not fundamentally selling your product at a profit, you will never succeed as a business. And driving up the speed of sales will only drive up the speed of your bankruptcy. So this visibility you have into what it is really costing you to sell your product on the fundamental product level is a very important thing. But that is immediately followed by the importance of this concept that Jeff was talking about, the cost of sales. And one of the best ways to think about this cost of sales is anything that is a true variable cost, meaning the more my sales go up, the more I'm going to incur these costs versus fixed costs that don't really move in relationship to sales. So as Jeff was explaining this kind of list, one of the things that you guys probably were able to see in common here is that every single one of these fluctuate in perfect correlation to the sales. I can't sell a product on an online platform without incurring some sort of payment processor fee. And what I'm incurring in payment processor fee is going to have a perfect correlation with the level of my sales. If my sales triple, my payment processor fees are likely to triple, as opposed to maybe the rent on my warehouse. That is not going to fluctuate in the same way, and there's not going to be this perfect correlation between like my warehouse costs and my sales. It's not going to go up and down. It's not going to follow each other through. And so when you're looking at this cost of sales, one of the things we invite our clients to do is to actually like combine it into a subcategory called cost of sales, and right below cost of goods sold, have every single one of these categories that have a perfect variable correlation with sales. Basically, like, what do you call it? When it like condenses or like collapses, like have it set up in a way where it's all collapsing into one category called cost of sales, and that will give you the ability to not only see your cost of goods sold, but also see your cost of goods sold in a really clear way. So this is just an example of how we recommend you lay this out. You notice Stephen is on the bottom right of the corner, our COO. This is a great video he put out. Cost of sales versus cost of goods sold. That's on our YouTube channel. If you want additional information about this, I recommend going and looking at that, finding that video, and to learn more about this. Carly, why don't you take us in the topic of like when COGS is going wrong?
Yeah, and just to piggyback off what you were saying there on the financials, another big piece for me is calculating your gross profit margin and making sure that's just based on your cost of goods sold. And then you know how much money do I have left to cover the rest of those costs. If they're wrapped up in the top, it just is, it kind of skews it. So yeah, organizing your P&L really helps. So we know that the cost of goods sold is the biggest expense for most businesses. And if you don't get it right, a lot can go wrong, right? You might think you're making money, like Brittany talked about, but you're actually losing it. If you don't know how much your product really cost, you could sell them cheaper and lose money. We had a client come to us just recently that was selling a lot, but they weren't making any money. So we did a COGS analysis, and some of their top products we showed them were actually given a price lower than the cost. So even though they were selling a ton, they weren't making any money because they priced it wrong. It's another big thing that can go wrong. You might set prices too low and lose money, right? Another thing is you could run out of cash. If you spend too much money on inventory without knowing your actual costs, you won't have enough money to cover your other expenses. And if you spend too little, you might run out of stock and miss out on sales. Another thing that could go wrong is you might have too much or too little inventory. Without tracking the COGS, you might order way too much and you're wasting money on storage and holding costs, or not enough, and then you're losing sales and you're out of stock. If your financial reports, if the COGS aren't right and it's not organized right, it could be a total mess. And if your numbers are wrong and you really don't know if your business is doing well, then you have bad reports, it causes bad decisions and then big problems later. Here's the big one. You might have to pay more taxes than you should. If you don't track your COGS correctly, the government might think you made more profit than you actually did, and then you're going to pay more taxes than you really need to, right? Back to that bad decision. You could be making bad decisions without knowing how much you're actually making, right? You're investing in wrong decisions over and over and causing your profitability to change. Another one we don't think about a lot is your suppliers might overcharge you. If you're not tracking your costs, you might not notice when a supplier increases your costs or that you're not getting a very good deal, right? And then you end up paying more than you should have, or stopped and changed vendors because you weren't paying attention to your costs and even understanding the cost. But what it really comes down to, when COGS goes wrong, you could go broke and you could go out of business, because if you don't know your real costs and you keep making those same money mistake decisions over and over, it could cause you to go broke and shut down. And so let's see, we're going to do a poll now, right? And just see what problems you're having with COGS. What was the top problems you guys are having an experience with that? Or maybe you don't even know, but maybe if you're like new to this and you're not really sure, as you look through that list, what is the biggest one you feel like would be the biggest problem? Like, ooh, gosh, incorrect pricing, or maybe the financials are messy, or which ones have you experienced? So we'll give you a minute to look through those. And then I'm assuming Kelly will give us the results again too, and we can look at that before we move on to the next slide, which is Tamara, who's going to tell us what happens when COGS goes right.
So one of the things I want to point out while you guys are going over and submitting your answers is just how important visibility is. So this story that Carly just told about clients who were selling, that their top sellers, they were actually selling at a loss. This actually happens a lot. Like, it happens a lot to our clients, and it's because they don't have good visibility into what their costs are. So when they have big sales, in order to try and drive up the opportunity of their business, it actually happens all the time. They don't have good visibility and they end up putting themselves in loss positions. So it looks like one of the biggest issues you guys have is messy financial reports. Yep, that's a very common problem. Wondering if you're making money or losing it, right? Like, this is such a key thing. I just talked about visibility, and visibility is so important, but like, if you feel like you're kind of operating blind, you are not alone. I invite you to give us a call, because this is one of the problems that we help solve for, and that Finale and A2X help solve for as well. But this problem, wondering if you're making money or losing it, the anxiety that causes and the stress that causes, really just not knowing where you stand, and therefore what decisions you could be making, what decisions you should be making, when you just don't have the visibility that you need. So let's turn the time over to Tamara to talk about why it matters to do COGS right.
Thank you so much, Brittany. And it's so funny because I just kind of feel like this is the conversation can literally just follow from slide to slide, because, there's so many correlations. Carly gave an excellent overview of when COGS goes wrong, but a lot of, some of the anecdotes or, the whys really tie into why it matters to do COGS right to begin with. The bottom line is, if you're working with inventory, COGS really matters for so many reasons. There are so many reasons as to why we want to do it right. And at the top of that list really picks up from what Brittany was just mentioning, a moment ago. You want to show that you're actually making money, right? Many businesses think that they're making money. And Carly gave an excellent anecdote, about a business that did think they were making money for one of their top sellers, only to realize that they were actually losing money. So, some businesses fall into that that category. Some fall into the category of, breaking even, and that's because they haven't calculated their COGS correctly. So it matters because you want to make sure that you're directly aligned with showing your profitability. It matters because you want to make sure that you can keep your cash flow healthy. If you're not accurately tracking your COGS, then pricing really becomes a guesswork, and properly tracking your COGS is really a framework even for your pricing, because it helps you to determine what is my profit margin, and you don't want that to be a mystery, right? And that cash flow, we want to make sure that that's not going to turn into some sort of a roller coaster. I think both Brittany and Carly touched on how it can affect your taxes, because in many instances when you're running an e-commerce business, especially when it's successful, you have a lot of transactions that are taking place at any given time, and then all of a sudden tax season hits and you realize you owe more than you expected, and it's like, hey, what's going on? So it really matters, because you want to make sure that you're tracking COGS accurately, so that when it is time for tax season, you're not holding your breath, waiting on what's my liability, what do I have to pay. It matters because you want to make sure that you can plan for growth, and when you're properly managing your COGS right, you're not just tracking your expenses, but you're also ensuring that your business really has a clear, scalable path to long-term profitability. Again, going back to the story, if you're not certain if a top seller is even making you money, how do you then have, a pathway to long-term profitability? So you definitely want to make sure that you're properly tracking even for growth. Helping you set the right price for your products. As I mentioned before, what you're hearing is that we're kind of regurgitating a lot of the same key points, because this is how much it actually matters. If your COGS isn't locked in, again, you're selling at a loss. And so that pricing accuracy is just something that really does tie into it. One of the things I don't think we touched on yet is that, it matters because you want to be able to make it easy to get a loan. If your COGS isn't, being tracked properly and your books are all over the place, and I think I just saw from, the last poll, messy financials, right? Or reports. It's really about building a profitable, sustainable business. And that's actually going to start with well-tracked financials. And so, we want to make sure that that data is accurate so that it does make it easy to get a loan. And last but not least, it really just helps you make better business decisions. I think this is everything that we're touching on really funnels up into how can I make better business decisions? What tools allow me to make better business decisions? And when you're properly tracking COGS the right way, it really becomes a foundation for strategic business decisions, because whether you're deciding how you're going to price your products, or when to restock, or if you can afford to run a discount promotion on a product, your COGS data is really going to be the framework for giving you that clarity. Okay. And now that we understand why COGS is so critical, if we can go to the next slide, let's really look at how to actually calculate and recognize it. And there's a lot to take away from this particular slide itself. At a high level, one of the takeaways here is just to understand that COGS isn't just a single number. I think you saw from the calculation or equation that Brittany introduced to everyone a little bit earlier. It's really a puzzle made up of key pieces, and when they fit together nicely, it's very simple for you to be able to recognize or properly track those COGS. So we'll start with those product costs. What goes into COGS? Again, we're not just factoring in what is that per unit cost for that product. We're looking at, as Brittany mentioned earlier, your landed costs, shipping, storage, what no one wants to hear about, tariffs, right? Duties, ocean freight, air freight, all of those additional landed costs really are factored into that product so that you can ensure that your margins are exactly what you're expecting for them to be. Quantity is another one. COGS is actually calculated based on how many units, were sold, not just how many units were purchased. So accurately tracking that quantity of inventory that you have left, really helps you determine, hey, are my COGS, accurate or not? Now, one of the key pieces that really cause a lot of conversation, sometimes even challenges, happens to be timing. I think we personally, have questions about this on a daily basis. When should COGS be recognized? And some systems recognize it at the point of sale, while others, like Finale, we recognize COGS when the order ships. And the timing of that, the timing actually impacts your reporting and your tax calculations. Again, if you're recognizing COGS when an order is shipped, that may align with your revenue recognition, and it matches COGS to the revenue at the point of sales. And that works for businesses that are fulfilling instantly. But the second timing would be recognizing COGS again when that order is shipped. That's more accurate for your physical goods. It ensures that that inventory is actually removed from the stock when it leaves the warehouse. Now, if you are not recognizing COGS when an order is shipped, you can run into a situation of premature recognition, because if an order is canceled before shipping, then COGS can be mistakenly recorded. And for e-commerce and inventory heavy businesses, recognizing COGS when an order ships is often more precise, because it actually reflects that stock movement and prevents recognizing costs for unshipped or canceled orders. Now, sometimes there's that slight delay in recognition because the revenue might be recorded at the sale while COGS is recorded at the shipment, and that could create short-term timing differences. And I'm actually going to, bring Carly in to talk about how that can be handled, since that happens to be, again, a question that comes up often. So Carly, you want to give a little color to that?
Yeah, and this has come up quite a bit with clients lately. It's interesting how things come and go, but we've had this come up a lot lately. And like Tamara said, it kind of depends on their sales. We want to recognize COGS when revenue is recognized. So then you have to talk to our clients and say, okay, do you have a lot of pre-sales? Are they doing a lot of pre-sales? And if they are they recognizing that pre-sale, or are they deferring that revenue? So there's got to be a decision there. And then their fulfillment with their sales, are they selling a product that takes months to be delivered? There are companies like that, right, where it takes a couple months. And if that's the case, when are they recognizing the revenue, and do they want to match the COGS to it? And if they decide, I am going to recognize the revenue right when I recognize the pre-sale or the sale, so I'm going to go ahead and recognize the COGS. Well, we know when COGS is booked, what happens to inventory. Inventory goes down. So now, even though that inventory is still in your warehouse and you haven't shipped it, you recognize the COGS and what's happened to your balance sheet. So now your inventory is understated. So it brings up a lot of questions with clients, and just having them determine what they want to see in their financials, how they're recognizing things. If there's not much of a timing difference, like Tamara said, when recognizing COGS when they ship will keep your inventory value more true. But if you really want to recognize it against your revenue and have a real good, strong P&L, so we just talk to clients and try to figure it out for them, what works best for them and their business, and make sure they understand the process they've chosen, what methodology they're using.
Thanks so much for that, Carly. And that's the reason why we always recommend LedgerGurus, because they can definitely help you all determine, which recognition is right. And if we can go back to more screens, because there was one other puzzle piece that we didn't touch on. Thank you so much. And that was actually the costing method, because this is very key. And I want to make sure that we did at least touch on that, because again, this happens to be one of those areas where, there's always a question in regards to, hey, what valuation method, are you all recognizing, or what are you using? And the common ones that we generally hear are FIFO, first in, first out, LIFO, last in, first out, and weighted average. And each one can actually impact your profitability and even your tax burden differently. So just, at a high level, just wanted to touch on that a bit before we moved on. With first in, first out, and I'll use the same example for all three so that we'll understand what the difference is. This is just actually recognizing your oldest inventory costs first, meaning that newer inventory costs are going to remain on your book. So an example would be, if you're an e-commerce business and you are, selling t-shirts, right? And you paid $5, for your t-shirts last month, $7 for your t-shirts, this month. FIFO is going to assume that you're selling the $5 ones first. Okay. If it's last in, first out, then the newest inventory inventory costs are going to be first, meaning the older inventory is going to remain on the books. So again, using that same example, if you sell the $7 t-shirts first instead of the $5 ones, actually your reported profits are going to be lower. That also reduces your taxable income. And so, that's something that, businesses sometimes do. Now, the last one is the weighted average, which actually smooths out your cost fluctuations. That happens to be the valuation method that Finale supports within our system itself. And then using that same example, if you have 100 t-shirts and, half of those shirts you spent $5, the other half you spent $7, then what's happening is the system's going to calculate the cost per unit, which means that the stated per cost unit across all 100 of those shirts is actually $6. So, this really helps to keep your pricing simple, and it averages, out all of your inventory costs to create a single cost per unit. So as you can see, there's definitely a different impact. And, because of that, we know that there's so many moving parts, and it's easy, for, COGS to be, manually calculated. That can lead to some costly mistakes. Zach's going to actually dive into some of those common mistakes. But again, real quick, Carly, can you give a little color? Because with those different valuation methods, I do know that sometimes there is that different impact that you can have on your financials before Zach dives into the problems with calculating COGS manually.
Yeah, and I'm with you, Tamara. We tend to lean towards the weighted average just because a lot of clients come into us are trying to do it manually and calculate their own cost and manage it and trying to remember the first in, the first out. And the FIFO and LIFO really depends on your industry and what you're selling. The average really works for most e-commerce businesses, where they're not tracking it by a batch, or they're making it. We could go on and on about this. In fact, Brittany, do you have anything to say as far as FIFO or LIFO? Or I know we usually tend to use the weighted average just because of the industries that we work with.
Yeah.
And it evens it out, like Tamara said.
Yeah, and I would agree with you. It does definitely, it is easier to track in a spreadsheet, the trying to keep track of not only the product SKU itself, but which tranche we're in and what the SKUs are for this tranche versus this tranche. If you have any hope of doing FIFO or LIFO at all, you must be in an inventory tool. It is virtually impossible to do that in a spreadsheet. But I just also want to make it clear that every single one of these costing methods are completely approved by GAAP. So it doesn't really matter which method you choose. What really matters is whether you're consistent in the approach you take. There's pros and cons, frankly, to every single one of these. And a good tool helps to mitigate some of the pros and cons of those. So there's not even a preference, and this one's better. Each of them has their own set of limitations and their own set of hassles. So, but they're all considered completely legitimate costing approaches. Yeah. So, Zach, we'd love to hear from you on what you feel like the challenges are of the manual processes as we talk about how FIFO and LIFO are basically out if you're trying to do manual processes.
Yeah, thanks, Brittany. And, I will say I love spreadsheets. Spreadsheets are my happy place. COGS is not the place for that, though, right? And we've got a lot of stuff listed here. For me, all of these stem from really three things. And that's going to be human error, the sheer volume of data that goes into tracking COGS, as well as the timing of when you're receiving all of that data to properly track those COGS. We heard, Brittany and Tamara both talk about, all the different things that are going into really getting that true landed cost to track your COGS properly. We've got shipping, tariffs, your actual product costs, all of those go in. And, the one thing that we didn't talk about, in terms of there are all those things, but they're coming in at different times and from different people. The invoice coming from our manufacturer, from our shipping company, from customs, those are all hitting us from different places, coming at different times, maybe going to different people. It's a lot to really kind of consolidate and get put into the right place when you're doing these manual practices. It's really easy for certain invoices that are contributing to those costs to get missed and not get input into the spreadsheet. And it really leads to a lot of, back and forth trying to make sure that all of those things come together correctly. I know prior to Finale, my background was doing inventory and logistics management for sellers. And, in those companies that tried to do this manually, I can't tell you how many days I spent that first week of the year just going back and forth on reports with my accounting department on things that really, when you're using a system that gives you those processes, can have done for you. So, it's a lot of data that you're just trying to keep track of, and get that timing correct. Do we have these shipments attached to the right purchase orders? Do we have these shipping costs attached to the right purchase orders? Do we have these tariffs attached to the right purchase orders and the right products on those purchase orders? Are we getting that timing in correctly so that, maybe those changes in COGS, whether they be shifting manufacturing costs, as we're all kind of experienced now, shifting tariffs, are those getting applied in the right time and place so that we're seeing those COGS accurately as those, as the sales go out? And so, really those three things, dealing with back orders, are we accurately tracking what was actually received versus what was in the purchase order? These are all huge data points that are easy to miss, easy to overlook, and take a lot of time when you're trying to do these with manual processes. With that, Finale and A2X are, of course, both great options. I'm going to pass this over to Jeff to go ahead and talk about how A2X helps calculate COGS.
Thanks, Zach. I love this webinar. I've got Brittany talking about algebra calculations, Zach talking about how much he loves spreadsheets, FIFO life weighted average. I feel like my brain is too small to be here with all of you Bitcoin folks. But as kind of Carly and Brittany have mentioned time and time again, and this is incredibly important, connecting with an accounting professional that can recommend the appropriate tooling and the appropriate method for you is like the most important thing, right? Because we're going to talk about A2X and we're going to talk about Finale, but like digging into like which one is actually right for your business, your industry, and your circumstance, trust the experts. I'm a very honest person, and I will honestly tell you that A2X is pretty badass when it comes to payout reconciliation. We're I said we won awards, and like I gave you the proof points, so it was legit. But we are arguably the most accurate solution on the market, the most scalable solution on the market. So whether you're doing, a few thousand orders a month to tens to hundreds of thousands of orders a month, like A2X will scale with your business, your level of complexity, whether you're in single country, multi-country, multiple currencies, so on and so forth. So like we do that really, really well. But in terms of COGS, I would consider A2X to be a lightweight solution, right? The way that you manage your inventory and the way that you do inventory accounting, I would argue that it's like on a spectrum. And again, this is where an accounting professional will tell you where you are and what is the right tooling for you to track your COGS. So when I say A2X is a lightweight solution to track COGS, this is how we do it. If you have a rough idea, or at least a spreadsheet with all of your COGS tracked in, all you have to do is upload those COGS manually into A2X. You can manually input them into A2X, or you can link A2X up with that spreadsheet. A2X also will sync with Shopify and pull in your cost from Shopify. And then at time of payout, that is when we will calculate the COGS and post it as well. And that's what A2X does. It's like super simple solution. So if that spreadsheet that you have is continually updated, we'll pull in the data and make sure that we're posting the appropriate COGS, or you can do it manually within A2X. So a lot of people, when they just start on their inventory accounting journey and their COGS journey, they'll use A2X as that kind of first step because it's simple, it's useful, and it speaks to one thing that Brittany said that I think is tremendously important, is that it allows people to go from a manual, inconsistent process to a consistent process. Whether it's lightweight or not, and whether it tracks all of these different components or not, it doesn't really matter. It's consistent. And that's kind of how I would think about starting with A2X on the COGS side. So if you're using us for payout reconciliation, like you could be a very mature 9-figure business, that's totally cool. But on the COGS side, you tend to be a little bit earlier on your journey of inventory accounting. Brittany, would you think that's a relatively fair statement?
Yeah, I do actually, and that's probably, I think you did a beautiful job of explaining the place that I think A2X sits in as far as the inventory world goes. It is never going to be a replacement to a full IMS, in large part because it is a static costing system as opposed to a dynamic costing system, whereas a IMS moves you into a dynamic costing system. But as anyone on this call knows who's ever tried to operate an IMS, you have to be prepared for the level of maturity that is going to be required of you. And a lot of new small businesses, they're just not ready for that. But costing based on a cash approach is really underserving yourself because it skews your financial picture so much. So how do you step into good costing without tackling a full IMS? Like A2X does a beautiful job of creating an entry point for that handles a lot of the pain of it without requiring you to be prepared for the full maturity of an IMS as you're getting ready to be prepared for the full maturity of an IMS.
Bingo. And we do try to make the process as automated as possible, right? Like the initial COGS functionality, the way that you used it, you had to manually input your COGS. Then we transition to the ability to pull the data from a spreadsheet. And then we introduced the Shopify cost sync. And I don't want to tease kind of the 3 or 4 slides coming up, but we're also introducing an integration with Finale once you are ready to kind of level up and to get into a more mature inventory accounting system. So yeah, but again, the most important piece, I'm gonna end with this. Regardless of the tooling that is available, just talk to somebody who knows what they're talking about to help you kind of identify what is the right method, what is the right tech stack, and when you should be ready to either make a transition into A2X or potentially a fully fledged inventory management solution.
Right. Yeah, so Zach's going to take us into like what that transition will look like for more robust functionality and what's involved in that.
Awesome. Thanks, Brittany. Thanks, Joppin. And I couldn't agree more with Jeff. You know, utilizing companies like LedgerGurus in particular, they're really going to steer you in the right direction here. But, you know, if they're steering you for kind of that next level up, the way that Finale is going to calculate these COGS and kind of take you to the next level is by really giving you that more, you know, dynamic, full-featured way of looking at your cost of goods. One thing I think Tamara mentioned previously is Finale is going to use the weighted average version of costing. And we are going to use your landed cost for that weighted average. What that means is on your PO, you're going to have the ability to, you know, add in your shipping, your tariffs, all of these things that we've been talking about, you know, throughout the entire webinar into that purchase order and have them you know, get allocated out into the cost of those products. One of the great things with Finale is that we can give you some options on how you allocate those out as well. So whether you're allocating those costs out by cost that you're paying to your supplier, by the weight, by the volume, there's lots of options there for you to kind of figure out what works for your business, or partner with Brittany and her team to figure out what works best for your business, right? And that might be different depending on the specific charge as well. You know, it may be common to see shipping split out by volume, whereas, you know, something like tariffs might be split out by, you know, your subtotal of that product. And so we really give you a lot of control there in how you're building out that landed cost. And you may have costs associated with that PO that you don't want allocated into the landed cost. You can have those options as well. The next piece of this is when we calculate, you know, that new costing and add it into the average. We're going to do that upon receiving the purchase order. So while that order is, you know, if you're ordering from overseas or even down the street, while that order is in production, on the water, in transit to you, it's not going to have an effect on that weighted average until you actually receive that into your warehouse. At that point, it will get averaged in. You know, and similar when we recognize the actual COGS, as Tamara mentioned earlier, we're going to do that upon shipment. Since Finale is that full-featured IMS, we have that insight into both when the order was sold and when the order was shipped, which allows us to give you that COGS recognition at time of shipment, which, as stated earlier, may or may not be the right move for your business. And if we could go to the next slide, Sam, we'll get into a little bit more of kind of the deeper functionality here. So we kind of talked about, the purchase cost tracking. We're going to give you the ability to add in all of those additional fees, charges that may go in there, and give you that look at your real-time inventory valuation. So as soon as you have those adjustments to your costs, again, we're using that weighted average cost. So that's going to filter down to all of your inventory, give you that nice, simple, real-time look at your valuation. The next big thing is going to be for any clients that may be using bill of materials or kits or bundles. One of the things that we see commonly is, even if you might have a great view of, what is my cost of goods, what is my margin on all of these individual components, once you bundle those together and start changing the pricing, a lot of times you're losing that visibility. And so while you may be, profitable on each of those components when sold individually, the discounts or things like that you may be giving on bundles may change that picture for you a little bit. So having that detailed look at, if I were to, build this kit or sell this bundle at this current point of time, what are my costs going to be to do that? Having a system like Finale is going to give you the insight into that. We talked about COGS at time of shipping. I won't harp on that again too much, but I do want to just say that's really big. If you're a company that has, a lot going on with this deferred revenue, with pre-sales, that can be really huge for keeping your COGS in line. Going back to my, previous experience as a seller, we did like everything on pre-sales, and so I'd be maybe shipping out stuff at one average cost today while I'm selling stuff that's not going to be going out for another 3 months that has a totally different, set of costing. So that can be really helpful for those situations. And I did want to get into a few of the more, detailed things as we start getting into, how is this all going to look in your general ledger? How do we separate this out? So we're talking a lot about kind of simplifying what are the COGS for my whole business. But if you're looking to separate those out, further on your P&L and your GL, Finale is going to give you that ability to separate those COGS out by things like sales source, or if you have different product lines that you want going to different COGS accounts, you can set that at the product level. So it not only gives you the ability to track that accurately, but gives you the ability to really dive deep into how different sections of your business are doing and how the COGS are affecting those different sections of business. Lastly, I want to talk a little bit how we can get those COGS into a system like QuickBooks Online. And so we, of course, have the ability to, submit COGS for each individual sales transaction one at a time. For a lot of e-commerce businesses, though, you don't need to see those as individual transactions. So we also give you the ability to consolidate those COGS on either a daily or monthly basis to really simplify that tracking within QuickBooks. And then I am going to pass it back over to Jeff, who's going to talk about a little bit about bringing it home and integrating everything together.
Introducing the A2X for Finale integrate. No, I'm kidding. What I think is so funny, like and I love it. So not everyone here will know who Chris Hondel is, but Chris Hondel is the Chief Technology Officer for Finale. And I was asking him, describe why somebody would, pick Finale over any other inventory management solution. And Tamara and Zach, you might not like this, but Chris, he's the CTO, right? So in the weeds, super nerdy guy, he's like, Finale is an unbelievable solution for people that love to nerd out about inventory and really get into the nitty gritty. It's full powered inventory madness. which is like based on everything that you're describing, it's awesome, right? Like if you really want like a very robust, amazing solution, this is definitely for you. So let's talk about the A2X and Finale integration and kind of how to think about that with that context. So if Finale is kind of the finish line and A2X is the entry point, right? Like A2X is a lightweight solution. Like how do these two things come together? And it's actually quite simple. So if you're currently using A2X for your payout reconciliation and for your COGS, I talked about the different methods in which you can get your costs into A2X, right? Like you mainly put it in, you can connect it with a spreadsheet, you can sync it with Shopify. Let's say you start using an inventory management solution and now your costs are in Finale. Well, with this integration, you could actually continue to have A2X post your COGS, but you're pulling the cost from Finale, right? Eventually, you can move into a world where you get into kind of like the deep advanced COGS workflows, but I think of it as kind of like this awesome transitionary period because like I said earlier, inventory is a spectrum, right? Like you start here on the journey and you end here. And this just helps smooth out kind of that phase of evolution in the journey from going from a lightweight solution with A2X to like a more robust solution with a fully integrated inventory management solution like Finale. So this is what the integration does. It's super simple. Like what you're seeing here is you're just establishing a connection between A2X and Finale. And then A2X is going in and pulling in the costs. And then A2X then posts your COGS on a going forward basis. Now, the really cool thing is eventually you can transition to just have Finale doing all of your COGS and you can turn off this integration. And then on a going forward basis, A2X and Finale will work in parallel with one another. So A2X will reconcile your payouts and Finale will do your COGS. Then you can turn off income posting from Finale. So you're making sure that you're not duplicating data in your accounting software. These solutions work wonderfully well together. I think it's this integration is just like an awesome step to transition. Brittany, and Carly, I'd love to hear what your thoughts on the way that I just described, why we went about to build this integration with Finale.
Well,
yeah, and one of the things I wanted. Oh, sorry, Carly.
Sorry, I just wanted to mention most clients, all clients that we put on Finale or that use Finale also use A2X for their revenue recognition and reconciling because Finale does not do well at that. Although Finale is phenomenal at inventory and all of that, they do not, like Jeff says, A2X is one there. So they're already going to be using A2X for the revenue, and they might want to be using or they're already using A2X when they come to us and go to Finale and they're using it for cost. So it is kind of a nice, easy flow. Okay, we're still going to use A2X and we'll just change methodology slowly. So we're not going from boom to like this big change. And so I like that, Jeff. I like the thought of it being kind of a smooth transition where they're probably using A2X anyways as we're moving them into the tool. Sorry, Brittany.
Well, and I remember the first time that Jeff ever told me that he was thinking about integrating with Finale. And at the time, I remember thinking, why would somebody be pulling costs into A2X if they had an IMS tool? Like, I actually didn't see the vision of it. And he said to me, aren't you concerned about the timing issue? And this is where I think this solution really, really solves for problems. And to just give you guys a quick background on timing, because we want to make sure we have a couple minutes for Q&A, is that an inventory tool is going to provide costs at the time of shipment, whereas a revenue recognition tool like A2X recognizes revenue at the time of the sale. And so you're going to have a discrepancy there. And depending on how much you're selling and how long the delay between that shipment date and that sell date, it might create material issues in your financials. And so by having a tool like Finale basically track all the COGS and manage the inventory and the quantities and all the things that are going on, but then having it pull itself into A2X, which then matches those two things together, now you're getting the workflow functionalities of a full IMS, but you're getting the huge benefit of having a tool like A2X that reconciles all the payments, but now you're also getting a matching between the cost side and the revenue side of the period. So I would say that's the primary benefit that's solved by this sync that's happening right now. All right, so we're going to jump into the Q&A because we just have a couple minutes, and I did commit to answering questions at the beginning of this. So the first one I just want to touch on really quick. I just want to add a little color to Joey's question, which was to say, that he notices a whole lot of like fluctuation and large posting differences when he's selling on Amazon, and his clients do not like these inconsistencies. Last webinar that we did, Joey, I had Tamara go into a lot of detail about their deep integration with Amazon and how an understanding of what's really happening on Amazon actually smooths out some of those inconsistencies, because you've heard me say it before, I'll say it 1,000 times before I die, selling on Amazon is like being in an abusive relationship, and they have the worst 3PL in the entire world, and the visibility you have into what's actually on hand and what's actually happening is so problematic that if you're just tying out to what Amazon says, well, today they had it, yesterday they lost it, tomorrow they're going to find it again, and if you're basically tying out to Amazon constantly, the inconsistencies you're going to get are literally inescapable. So by having a better integration with what's really happening, which Finale does actually provide, you are going to get some smoothing out on that. But the unfortunate reality is that when you are using a 3PL, you lose visibility into what's actually on hand, and Amazon is literally the worst 3PL in the entire world. So there's that. Okay, then let's go real quick to the question: How does A2X input loss or other written off inventory into QBO? Now, I'm going to answer this quickly just for the sake of time, but please correct me if I'm wrong. So because A2X is not a full IMS, guys, it is what we said, something that tracks costs and allows you to post based on the quantity of what's sold. It is not looking at things like written off inventory. That's something you're going to be posting individually. It's going to be making a calculation that says, what was this inventory valued at? How many did we see sell? What should that calculation be? It's going to make a journal entry to go from inventory to cost of goods sold. A tool like a Finale is going to be a lot better for tracking things like losses and write-offs and all that other kind of stuff. Jeff looks, the thumbs up says you would agree with that question. Okay. The next one, how to use the month-end inventory valuation provided by A2X to reconcile with things like Amazon inventory, Ledger, QBO inventory, COGS, which should match the payoffs in A2X. So I'm, again, going to take my first tackle on this and then have you guys add color where needed. So think back to that equation, right, that I showed you guys, the piece that the ending inventory valuation plays. So when you are trying to basically true up your inventory, looking at what you actually have at the end of the month and valuing what that should be allows you to actually back into what cost of goods sold should be for the month. So if you're going to do a monthly tie out to an ending inventory valuation, which is a great practice, by the way, basically you're going to plug that against, you're going to plug cost of goods sold against that monthly inventory valuation. And as long as you are correctly reflecting inventory purchases that came in and you started with a good beginning balance, that ending inventory valuation is going to provide you the one remaining unknown variable, which is that cost of goods sold. So whether you are doing this in QuickBooks Online and you're going to tie that all out, or how you're managing or tracking that, that is a very valuable thing to have, is that ending inventory valuation. But it operates the same way. They're going to say, this is what we can see that you have on hand. This is what you told us the inventory is worth. Therefore, this is what the ending inventory valuation is. Therefore, tying your financials to that number will give you a more accurate cost of goods sold number. Anything you want to add to that, Jeff or Tamara or anybody? Nope.
I have a question for Jeff.
All right.
Brittany. Does A2X provide a month-end inventory valuation? It says how to use the month-end inventory valuation provided by A2X. Does A2X provide that? I've never seen that in A2X.
Don't you guys have a report?
A month-end evaluation.
I do think, though, it does provide a report that shows what inventory is showing on its hand for Amazon. Am I remember that incorrectly, Jeff? Like, I might be totally off about that.
Let me, in the follow-up email, I will send support documentation on this specifically.
Okay. Yeah. Thank you.
Okay, cool. And I think it was specifically like an Amazon thing that it had the ability to pull in and look at reports that said, what does Amazon say we have on hand at month end, which you can then use to do an inventory valuation, if I remember correctly. Okay. For Amazon FBA sellers, if you use Finale to input the COGS into QBO without A2X, how does Finale know to only input the COGS from the payout and not COGS of actual sales, which is different because of deferred transactions retained by Amazon? Finale, do you guys want to take a stab at this, or do you want me to jump in on this one too?
Want to go ahead and take it? want to go for it, Zach, or you want to just
me?
defer to Brittany? Yeah, go
Okay.
for it, Brittany, because I
Yeah.
think that we generally defer to you all on that one.
Mm-hmm.
Okay, so the question is, if you're using Finale to basically post costs of goods sold into A2X, how does Finale know to input? Oh, that just got moved. Okay, let's see, where did that question go? Just got moved out. Okay, how does Finale know to only input the COGS from the payout? So this is we're actually talking about the timing difference here. So basically, Finale is going to post COGS that have been for sales that have been shipped. It is not like making decisions based on like this one has paid out and this one hasn't paid out. The decision point that COGS, that Finale, and any other inventory tool is making, and it is the more right, to be clear, the more right financial approach in general. We recognize revenue and COGS at the time that the order is fulfilled, which means shipped. So that is when it posts COGS. You're going to post COGS directly to QuickBooks Online. From an IMS, you are going to be posting based on the shipment date. That's how these systems are basically designed to post. Does anyone want to add anything to that before I?
Nope, it's accurate.
Yep.
Okay. And from our friend Scott Sharp, A2X provides one of the most accurate month-end Amazon FBA quantities. Oh, I knew it.
Okay.
I added the support article in the chat as well, which provides detailed instructions to use it.
Okay, I was like, I know we're not imagining this, like, just because Jeff and I are not like
That's so
up
good to know.
on the integral like details of all this. I was like, I know. So Jeff,
Here's the problem.
Scott, thank you
Carly's right. Hard to find, right? So
Yeah,
like, put my marketing hat on and figure out like how do I get that more front and center.
yeah. And to Scott's point, it's only for Amazon FBA,
Yes,
which
100%.
most companies don't sell on just, I mean, they probably do have separate A2X channels, like wholly different discussion, but yeah, only Amazon FBA. Okay, this is good to know. I'm gonna read the article. Great.
Much love to Scott Sharp, who Jeff and I are both big fans of. Scott, he's a good friend of ours for years and years and years. So yes, we are not crazy. There is a really good valuation report provided by A2X for Amazon FBA quantities on hand at year end or period end or whatever. And because you have also said this is the value of what that inventory should be, then it also provides a ending inventory valuation, which can then be used to clean up your COGS for the month and give you better visibility into what's actually happening. All right, I think we got all of our questions answered. Looks like as I'm scrolling through here, we don't have anything else. So let's go to the next slide just to kind of do a quick recap. I want to thank our guests today, our partners. I love both of these partners, you guys. I would build entire practices around, I have built an entire practice around these two tools and these two partners. I could go on all day about why I love them both so much, why they're so integral. They both solve the problems of their space very, very, very well. They both support their customers very well. They both have great support. They both support their partners very well. They are wonderful to work with. They know their stuff. They are sharp. They are competent. They are responsive. They're just great. I cannot say enough good about these guys. So if you're looking for a tool that solves the problem of reconciling payments, A2X is your peeps. And if you're looking for an inventory tool that will help you streamline and mature your operations and give you great visibility into what's going on and support you post-implementation in a way that will allow you to stay successful on a tool, Finale is your people. And if you just need a really great accounting partner who can help you bring all these pieces together and create visibility into what's happening from a financial perspective, LedgerGurus is the way to go. Thank you so much for coming to our webinar, you guys. Your engagement was wonderful. Your presence was wonderful. Feel free to go back and watch those links, share those links, take notes, educate yourself, educate your friends, and thank you so much for participating. And to our partners, all my love in every way, and thank you very much. And to the back-end people who ran all of this, Kelly and Samantha, couldn't do without you guys. Really, really appreciate you.